Greece votes no and gold says so what? Joining me today is Frank Holmes of U.S. Global Investors. Frank, good to see you.
Good to be here.
So Frank, the Greeks voted no to new austerity measures, and gold should have seen at least a short covering rally or a flight to a safe haven position, but prices were trading near steady Monday morning. What are we seeing on the metals front?
Well, I think a big factor is just the currency factor of the strong U.S. dollar, what it pays on real rates of return relative to the euro and other currencies around the world. It is still so high, and the thought that the currency is going to get stronger because of rising interest rates makes the dollar the safe haven currency right now. As it comes for gold, there's so many new central banks that have become a player in gold, and selling of gold to provide stability and currency volatility is a factor I heard out of Europe earlier this week. And also, it's interesting in research reports I was reading this morning is that the office of the currency comptroller has moved gold from a commodity category to a currency. So gold, we've always said, it is a currency, and it all has to do with negative real interest rates and positive rates. And I think that gold you're going to see rise dramatically in these other countries' currencies, because as the EU continues to give money to Greece, it's just being wiped out. It's just gone. So gold will have this reset valuation that's going to take place.
Now, Frank, history has shown that markets can have a delayed reaction to events like the Greece referendum vote. Is it premature to assume that the Greece matter will fade away in the coming weeks?
I think we'll have to wait till Wednesday when we get Fed minutes coming out. I think these other factors will weigh into it. But yes, you're correct that there is a delayed reaction that takes place in capital markets of trying to figure out exactly what it means. But what it will mean to us in an analysis is that the German banks and the French banks will have to be recapitalized just like the Greek banks. So this new recapitalization means currency debasement. And this will mean that gold eventually has a snapback to much higher levels. But in the short period of time, it's real interest rates. Where is money going around the world is in search of high real interest rates.
Now, Frank, some analysts I've spoken to have said it's really the deflationary trends in Europe and the slowdown of the Chinese economy that will really be influencing and moving the metals. Do you agree?
Well, I think the big factor is it came out today, like global PMI is negative, Danielle. It's negative. That is, the 1 month is below the 3 months. In all our data mining going back 1, 3, 5, 15 years, whenever that 1 month is below the 3 months, commodities trend lower. And that triggers government stimulation, some economic stimulation to maintain economic growth. And if the world doesn't do that, then we're going to see a big deflationary cycle unfold. I don't think it'll happen to that degree, but it is in motion.
All right, Frank, what's your touchdown pass going to be this week? What are you eyeing for the metals?
Well, I think the big is the Fed notes. Let's see what the Fed minutes have to say, and that'll be coming out Wednesday, and see how the markets respond to those minutes in the direction of interest rates.
All right, Frank, thanks so much for joining us.
Great to be with you.
And thank you for watching. We'll see you tomorrow for a new Gold Report.